Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now, in the today's class, we will be quickly revising Essay 805, which is audit of special areas. This 805, it will be dealing with audit of single financial statement or audit of a specific element or item of a financial statement. Now, single financial statement means basically financial statements, they'll include P&L, balance sheet, cash flow, all right. But in some situations, auditor might be appointed to audit only a particular financial statement, like audit only profit and loss statement and give audit report, okay, on only P&L statement, or audit only cash flows and give the audit report on cash flows. This type of assignment might be done by a auditor. In that situations, auditor, he needs to apply the requirements of SA 805. In the same way, auditor might be appointed to audit a particular line item of a financial statement, like revenue audit or inventory audit. These are specific items or elements of a financial statement. So only that particular item will be audited by the auditor and he will give the audit report. In those types of engagements, he will be using the requirements of SA 805. Hope that is clear. Now, in the previous class, we have revised SA 800, which deals with special purpose financial reporting framework. Now, let us see what is the link between SA 800 and SA 805. Now, if single financial statement has been prepared as per general purpose financial reporting framework, with the help of general purpose financial reporting framework, single financial statement has been prepared. In that case, SA 805 will be applicable, and remaining SA 100 to that 700 series, they will also be applicable. Next situation, if the single financial statement has been prepared as per special purpose financial reporting framework, in that case SA 805 will however be applicable because it is a single financial statement. Along with SA 805, SA 800 also gets applicable because special purpose financial reporting framework is being followed for the preparation of that single financial statement, and SA 100 to 700 series, they will however be applicable. So this is the interlinking between SA 800 and SA 805. Here you can find it. Interplay between SA 800 and SA 805. Next, moving to the standard. As I have already told you in the previous 800 revision video, this 800 series standards, you can divide them into three parts. First one, considerations with respect to accepting the engagement, considerations with respect to planning and performing the engagement, consideration with respect to reporting. So first part, that is consideration while accepting the engagement. Now, while accepting the engagement, first of all, the financial reporting framework that is used by the management should be acceptable to the auditor. So determine acceptability of the financial reporting framework and whether that financial reporting framework is providing adequate disclosures that are necessary for the users, that you will check. Next, if the single financial statement has been prepared as per a financial reporting framework, and this financial reporting framework is developed based on a financial reporting framework that is used for complete set of financial statements, and that financial reporting framework is developed by a standard setting organization. Let me tell you somewhat clearly. Okay, single financial statements, these single financial statements have been developed based on a financial reporting framework. Now, this financial reporting framework itself has been developed based on a financial reporting framework that is used for complete set of financial statements. Okay, and this financial reporting framework, which is used for a complete set of financial statements, has been developed by a standard setting organization. Okay, now standard setting organization has developed a financial reporting framework for a complete set of financial statements. Based on that financial reporting framework, a particular financial reporting framework for the purpose of single financial statements has been developed, and as per that single financial statements have been prepared. In that case, this financial reporting framework will be acceptable to the auditor if this financial reporting framework includes most of the elements or most of the requirements of the financial reporting framework on which it is based, that is on this financial reporting framework. In that case, the first financial reporting framework will be acceptable to the auditor. Hope you understood this. Next, considerations in planning and performing the audit. First of all the relevant standards on auditing will be applicable for audit of single financial statements or audit of specific item or element of a financial statements. All relevant standards will be applicable. Next, if auditing complete set of financial statements, if auditor is auditing complete set of financial statements along with single financial statements, okay, both the engagements are assigned to single auditor only. In that case, that auditor needs to give a separate audit report for both the engagements. You cannot give same audit report for audit of complete set of financial statements as well as well as audit of single financial statement or audit of a particular item of financial statements. You need to give separate audit reports. Hope that is clear. Next, auditor, he might also be required to perform audit procedures on interrelated areas. Let's say for example, auditor has been appointed an engagement to audit inventory, okay, a single item of the financial statement, inventory auditor. Now inventory, that is the closing stock, it will be dependent on sales, purchases. So auditor, he needs to perform audit procedures even on sales and purchase also, because they are interrelated. Hope that is clear. And finally, he needs to determine materiality for the single financial statements. He might have determined materiality for the complete set of financial statement audit, but for single financial statement audit also he needs to determine a separate materiality, because the materiality for the single financial statements will be lower when compared to the materiality for the complete set of financial statements. You cannot take the same materiality. You have to again determine materiality as per SA 320 for the audit of the single financial statement or audit of specific element of the financial statement. Hope that is clear. Next, coming to the reporting aspect. Now in this SA 805, reporting aspect is most important. If you directly read this from the book, you will not be able to understand. You first of all go through this table, then read from the book, you will be able to understand. See, now reporting. Here there are audits of three elements. One is audit of complete set of financial statements, okay, audit report on complete set of financial statements. Audit report on audit of single financial statement. Audit report on audit of a particular element or item of financial statements. Now what type of opinion the auditor can give will depend based on the opinion that the auditor has given on complete set of financial statement. See, if on complete set the auditor's opinion is unmodified, in that case auditor can give either modified opinion or unmodified opinion for audit of single financial statement. In the same way, he can give either modified opinion or unmodified opinion for audit of a particular element or item of financial statement. Hope this is clear. Here modified means three types of opinion, any of those three types, that is qualified, adverse, disclaimer. Of those three, anyone can be given, or unmodified, that is clean opinion, can be given. Next, if auditor has given qualified opinion on complete set of financial statements, in that case also he can give either modified or unmodified for single financial statements, modified or unmodified for a particular element or item of financial statement. This is easy. Coming to the third one, if auditor has given adverse opinion on complete set of financial statement, then the auditor's opinion on single financial statements must be only modified opinion. Why? Because on complete set of financial statements auditor is giving adverse opinion. That means he is stating that financial statements are not showing true and fair view. Like this he is saying for complete set of financial statements, but for single financial statements he is saying this single financial statement is showing true and fair view. How is that possible? It will be contradictory in nature. So if he has given modified opinion, not modified, if he has given adverse opinion for complete set of financial statement, then he should give only modified opinion for single financial statement. Hope that is clear. Modified means any of those three, qualified, adverse, any of those three can be given, but he should give only modified opinion. He cannot give uh, unmodified opinion, that is clean opinion, he cannot give. But however, if he has given qualified opinion for complete set of financial statements, then he can give unmodified opinion for single financial statement or element, or a particular item or element of financial statement. But that is not possible for adverse. Why? Because in qualified opinion, what will be your terminology? Except for a particular item, remaining financial statements are showing true and fair view, like that you will say for qualified opinion. But for adverse opinion, you are saying that financial statements, to a most of the extent of financial statement, okay, entire financial statement, they are not showing true and fair view. Okay, negatively you are giving in case of adverse opinion, your terminology is negative. So if you give clean opinion for single financial statement, in this situation, the both the opinions will be contradictory in nature, so you cannot give it. But however, uh, for element or item also, you need to give only modified opinion, but there are certain exception for this. I have given it as exception 1. That means in that exceptional situation, even though you have given adverse opinion for complete set of financial statement, you can give clean opinion for a particular element or item of the financial statement. Okay, this exception, it is not applicable in this single financial statement. Hope that is clear. What is this exception? We'll see it. Next, fourth situation. If you have given disclaimer of opinion for complete set of financial statement, then also you have to give only modified opinion for single financial statement. However, in exceptional cases, you can give unmodified opinion. Here, exception is applicable, but it is exception number 2. There are two exceptions. Okay, here in the third situation, exception 1 is applicable for single element or item, but here in the fourth situation, for single financial statement, exception 2 is applicable. What is exception 1, what is exception 2? I will explain you. And again, if you have given disclaimer of opinion for complete set of financial statement, then for element or item, you must give only modified opinion. But however, in exceptional situation, you can give unmodified opinion. Now coming to what are those exceptional situations. Exception number 1, that means in these two situations, in those two situations, even though adverse or disclaimer of opinion has been given for audit of single element or item of financial statement, you can give unmodified opinion in these exceptional cases. What is that exceptional case? Let us see. Law or regulation does not prohibit giving unmodified opinion. Okay, first of all, law or regulation should not prohibit from giving unmodified opinion, and both audit reports are not published together. Okay, because in the audit of complete set of financial statement, you have given adverse opinion or disclaimer of opinion, and in the audit of single element or item of financial statement, you are giving unmodified opinion, clean opinion. If you wanted to give clean opinion, then both these audit reports, they should not be published together. This is also one of the point in the exception. Next, and specific element does not constitute major portion of the financial statement. Okay, that particular specific element which you are auditing, that should not constitute major portion of the complete set of financial statement. If these three are satisfied, then even though you have given adverse or disclaimer of opinion for complete set of financial statement, you can give unmodified opinion for single element or item of financial statement. Okay, but this exception 1, it is not applicable for audit of single financial statement. It is applicable only for audit of single element or item of financial statement. Hope that is clear. It is very important that you understand this. Next, exception 2. Exception 2, it is applicable for audit of single financial statement. See here in the table you can find exception to I have kept. That too only in case of disclaimer of opinion. For adverse of opinion, no exception is applicable. Okay. See. Now, what is this exception to? Auditor in the complete set of financial statement, he has given disclaimer of opinion. Disclaimer of opinion means he is not able to obtain sufficient appropriate audit evidence, and if at all there are any misstatements, that misstatements will be both material and pervasive. Like this, the auditor has concluded. In that situation, he will give disclaimer of opinion. Now, in the complete set of financial statements, let's say for example, because of profit and loss statement and cash flow statement, auditor is giving disclaimer of opinion. He has not obtained audit evidences with respect to profit and loss and cash flow, so he is giving disclaimer of opinion. But with respect to balance sheet, he has obtained audit evidence and he is completely satisfied with respect to balance sheet. But this audit is with respect to entire financial statement. Now he cannot give his opinion only on the balance sheet in the complete set of financial statements. So even though his opinion with respect to balance sheet is unmodified, since with respect to P&L and cash flow, he is not able to obtain sufficient appropriate audit evidence, overall he need to give disclaimer of opinion. Now in this situation, because of this, he has given disclaimer of opinion. Now the same auditor has been given the engagement to audit only balance sheet. Now with respect to balance sheet, his opinion is unmodified. He has obtained all the audit evidences with respect to balance sheet and he is completely satisfied. Now in this situation, with respect to balance sheet, since he has obtained all the audit evidences and uh, he is completely satisfied with the balance sheet, he can give unmodified opinion with respect to the balance sheet, even though he has given disclaimer of opinion on the complete set of financial statements. That is the exception number 2. Okay, in these types of situations, okay, if the disclaimer of opinion is not because of the single financial statement, then you can give unmodified opinion for the audit of single financial statement and disclaimer of opinion for the complete set of financial statements. I know with this I have tried maximum to explain completely in this revision video. Even if you are not able to understand, you just once go through this chart and again listen to this class, you will 100% understand. Okay. Yes. Note, issue separate report for audit of single financial statement element and audit of complete set of financial statements. You need to give separate audit report. Now, this is a revision with respect to SA 805, and this chart you can download it from the link that I will be providing you in the description. And if you want to purchase audit classes, you can visit our website lecturepedia.in and you can place your order. Okay, I'll be winding up this video as of now. Take care. Bye bye. See you.